Hey everyone, welcome back to official MM2H Resources, where we dive into all things related to the Malaysia My Second Home MM2H program. Let's get into it.
Malaysia could hit high income status by 2028, just a few years from now. But what does it actually take to get there? And are we even on track? Let's break it all down. Malaysia's potential to become a high-income nation has been a hot topic, especially as the World Bank defines such a country as one where the gross national income per capita exceeds $14,000. In 2023, Malaysia's GNI per capita stood at about $12,200. So, what's driving this growth, and what challenges could hold us back? To start, let's look at GDP, a critical component of GNI. In the third quarter of 2024, Malaysia recorded a robust GDP growth of 5.3% year-over-year, an improvement from 2023. Since GNI is closely tied to GDP, this signals progress. But GNI isn't just about domestic production. It also accounts for the income Malaysians earn abroad, minus the income earned by foreigners within the country. Even with some outflows, money sent out of Malaysia by foreign workers, for instance, our GDP growth supports a steady rise in GNI. But here's the catch. A strong economy isn't enough if our currency, the ringgit, weakens. The strength of the ringgit is vital because GNI is measured in US dollars. A weaker ringgit means we need even stronger economic growth to offset the currency's devaluation. For example, in 2023, the ringgit averaged 4.59 against the US dollar, giving Malaysia a GNI per capita of $11,970. But if the ringgit had maintained its 2020 average of 4.02, our GNI would have been $13,680, much closer to the high-income threshold. We saw some hope in late 2024 when the ringgit briefly strengthened to 4.1. However, it settled around 4.4 by the end of the year. A slight improvement from 2023, but still far from ideal. The bottom line? A stable and strong currency is critical if Malaysia wants to reach high-income status. Economic growth alone won't cut it. Structural reforms are equally important. One significant reform in 2024 was the removal of diesel subsidies, a controversial but strategic move. This decision saved the government $4 billion annually, money that could fund infrastructure projects like the MRT-3. To put it in perspective, each MRT-3 station costs around $1.3 billion, meaning these savings could fund 3 to 4 stations per year. Better public transport doesn't just mean smoother commutes. It boosts productivity by reducing travel times and traffic congestion. Imagine spending less time stuck in traffic and more time contributing to the economy. That's how better infrastructure can drive long-term growth and attract foreign talent and investment. Another key factor is fiscal stability. By managing spending and reducing debt, Malaysia can invest more in long-term growth areas. Countries like Singapore offer a great example. Its world-class MRT system not only improves efficiency, but also supports economic expansion by enabling workers to move around the city seamlessly. Malaysia has the opportunity to follow suit, turning savings from subsidy reforms into investments that pay off in the long run. The FDI factor, attracting global players. Foreign direct investment, or FDI, is another crucial piece of the puzzle. In 2024, Malaysia secured 160 billion ringgit in FDI, a staggering 18% increase year-over-year. This influx of investment is expected to create over 33,000 high-value jobs. One notable initiative is the National Semiconductor Strategy, launched in May 2023. This strategy aims to position Malaysia as a global leader in the semiconductor industry. Why semiconductors? Because they're everywhere. In smartphones, laptops, electric vehicles, and more. Malaysia is already the world's 6th largest exporter of semiconductors, accounting for 40% of our export output. However, most of our contributions are at the lower end of the value chain, such as assembly and testing. The NSS seeks to change that by investing in research, innovation, and skills training. By moving up the value chain, Malaysia can design and produce advanced technologies, creating higher value jobs and increasing national income. The aging population challenge. But it's not all smooth sailing. Malaysia faces several challenges, including an aging population. By 2030, Malaysia is expected to become an aging nation, meaning a significant portion of the population will over 60. This poses economic challenges, as a smaller and older workforce could drive up labor costs and reduce productivity. Fewer workers mean businesses must compete for talent, pushing up wages and production costs. This, in turn, can lead to higher prices for goods and services, essentially inflation. An aging population also impacts economic output. With fewer people in the workforce, Malaysia may struggle to maintain the same level of production, potentially slowing economic growth. Global factors, risks, and opportunities. External factors like global tensions and climate change add another layer of complexity. Trade disruptions, geopolitical conflicts, and environmental challenges can all impact Malaysia's exports and economic stability. However, these challenges also present opportunities. For example, businesses diversifying away from China due to global tensions may turn to Malaysia as an alternative. Similarly, Malaysia's involvement in BRICS could open doors for market access and technological exchange. That said, navigating these opportunities requires careful diplomacy to balance relationships with Western nations and BRICS members. A bright outlook. Despite these challenges, Malaysia appears to be on track to becoming a high-income nation. With a projected economic growth rate of 4.5 to 5.5% in 2025, the future looks promising. Key strategies like attracting high-value FDI, investing in infrastructure, and strengthening fiscal stability are setting the stage for long-term success. However, achieving high-income status isn't just about hitting a number. It's about ensuring that economic growth translates into better quality of life for all Malaysians. That means addressing issues like living costs, wage growth, and social equity. Malaysia is making significant strides, but the road to high-income status is filled with challenges and opportunities. What do you think about Malaysia's progress? For more insights on Malaysia's journey to prosperity, visit officialmem2h.com. Stay informed, and let's shape the future together.
Thanks for watching. If you enjoyed this video and found it helpful, please consider subscribing and giving us a thumbs up. Your support means the world to us and helps us create more content. Drop a comment below with your thoughts or what you'd like to see next. Until then, take care and see you in the next video.